Jim Chanos, chairman of Kinikos Associates, made a bitter exit after 38 years on November 17, 2023, current time. He has long been called Tesla's enemy and the king of short selling, and he closed his flagship hedge fund that day. He decided to return 90% of the remaining cash to fund investors by the end of the year. He announced that he will only manage personal accounts and serve as an advisor in the future. In 2023, the Kinikos fund's rate of return was minus 4%. During the same period, the S&P 500 index rose 18% and the Nasdaq index rose 36%. Kinikos assets, which amounted to 8 billion, about 10 trillion won in 2008, shrunk to less than 200 million, about 260 billion won, about 98% of the operating assets disappeared in 15 years. Short selling often causes investors to scram. Short sellers only benefit when stock prices fall. From the perspective of personal shareholders, their activities are disapproving in the United States. It is not illegal to short selling a specific company and publish reports alleging fraud. Tesla is attracting attention in the automobile industry as a company that can change the world by developing innovative electric vehicles. Among them, batteries. Tesla's core technology are manufactured by Panasonic, a Japanese company. This plays an important role in significantly improving the performance of Tesla's electric vehicles. However, Tesla suffered particularly from short selling. For this reason, Musk has long criticized the short sellers. During the COVID-19 pandemic, he stood on the side of individual investors and supported the rebellion against short selling hedge funds. Short selling is an investment method of borrowing and selling other people's stocks. If the stock price of a weak company is overvalued, it is likely to decline in the future. Find such companies and pattern their decline. Individual investors, both at home and abroad, dislike short selling. This is because it encourages a decline. Conversely, if stock prices rise contrary to expectations, short selling investors suffer large losses. Since it is a stock that you borrowed and sold, you will have to buy it and repay it at some point. This is called short covering. In 1985, Chanos founded Kinikos Associates, a short-selling company. The company's name comes from the Greek word cynic, meaning cynical. Chanos' cynical company was on the roll in the early 90s. He made a lot of money by short-selling banks and financial institutions in Texas and California, where the real estate market collapsed. At the time, his fund's return was twice that of the S&P 500 index. The legend of short selling has retired, but the scale of the Tesla short selling is still large. History, a stock rental data company, analyzed that Tesla was the stock with the most short sales among S&P 500 companies in the 4 months until last September. Recently, the average target price of Tesla of Wall Street is around $205. The battle between Tesla and short sellers is still ongoing.